Good morning, ladies and gentlemen, fellow traders. Well, good afternoon in some places and good evening in other places. Let's just say hello or good day, as the Australians do. Just remember, nothing I say here constitutes financial advice. Trading is risky and most people do lose money. So if you don't like losing money, don't trade. Today, we're going to talk about the age-old question. The age-old question of, can you trade on the 5-minute and 1-minute charts? Is it actually possible?
I don't think so.
So I'm going to go into that today a little bit later in the video. Well, not later, I mean, pretty much at the start of the video, but that's today's topic of discussion, let's say. I did a little survey on it, and would you believe it's very 50-50. It's very interesting when I have a look at what's actually a survey is telling me about whether you can trade on 5-minute charts or not. So today I'm going to talk about the pros and cons of trading on a 5-minute or 1-minute chart, how scalpers actually find the high probability trades on those charts, and I'm also going to talk about the mindset and the psychology needed for fast-paced trading, for trading on those lower time frames.
He gets it.
You know, we could look at some real examples of the trades, but I'm not really going to go there today. I'm obviously going to talk about the common mistakes that traders make on those time frames. So we are going to go into that. We are going to talk about that.
It just keeps getting better.
Most newer traders don't have any business trading below the 15 minutes because you're going to get hurt. You're going to lose. It's actually quite difficult to trade on those time frames, and I'll show you why, and we'll talk about it. I'm going to get started on that now. We're going to talk about it. Let's talk about the pros and cons. The pros and cons of trading on the 5 and 1-minute charts. I just need to find a chart here that we can use that's actually moving around. The interesting thing to look at with 5-minute charts, 1-minute charts, and different types of trading, what you also have to look at, for example, if I put this on an M5, will we get some movement? What you have to look at, for example, are you trading Forex? Are you trading an index? Or are you trading commodities? Are you trading crypto? These are important factors to think about when you decide to day trade, when you decide to trade on 5-minute charts or 1-minute charts or anything to that effect. What I find is if you trade Forex, for example, Forex has a way of forgiving you, coming back. In other words, if you get it wrong and you've got deep enough pockets and you wait long enough, Forex will sort of come around and maybe forgive you for making a wrong trade. But the indexes won't. The indexes, if they pick a direction, they go, and they normally just keep on going. So let me show you that. For example, if we take this to the S&P 500, for example, and we put it on a 5-minute chart, clearly it's not very forgiving. It's just falling off all the time. So it just keeps on going down. What you have to understand about the 5-minute chart, though, and it's really important to understand this, is this large chunk that you're looking at, this large chunk of trading, is very much just this one candle, especially if you put it on a day. This is very fast movements. In other words, when you take a trade on a position trade or a swing trade, and you take the trade here, you're looking at a 6,700 entry on the S&P with maybe a stop loss all the way. Let's say you were going short. I'm just going to use that as an example. Then your stop loss might be at 6790. So it would be 90 points away from your 6,700. I'm not even going to go into the detail on the profit side. I'm just going to go into the detail. If you were putting a stop loss in place, in this case, you would put it 90 points away, so maybe even 100 points away. But if you take it on the M5 and you say, well, I'm taking a short trade here, I'm going to take the short trade from 6706 and I'm going to put my stop loss at 6718. In other words, 6706, 6718, your stop loss is 12 points away or 11 points away from your entry. That's fast movement. And if you get the slightest bit of movement, it's going to take your stop loss out really quickly. Now, I've had a lot of traders turn around to me and say, yes, but on the 5-minute, what I'm going to do is I'm going to do something completely different. I'm going to take smaller trades. Okay, so this is what I hear all the time. I'm going to take smaller trades. That doesn't work. That never works. How is it going to work if you're going to take smaller trades? What's going to happen if you take smaller trades is you're going to get in with your smaller trades. So instead of risking $1,000 on a $100,000 account, you risk $100, 10% of that. But then it goes in your favor, comes down, makes you the profit, but you only make 10% of the profit because effectively you want to be trading the same risk on every trade. But now you're trading 10% of the risk, so you're only making 10% of the profit. I know you've got great schemes of goes into a loss, I'll add to it, and I'll dollar cost average, and I'll dollar cost average, and I'll dollar cost average. But then if you go into a loss, then it's gone the wrong way and it's gone against you anyway. If you go into a profit, you're going to be making small profits because every time it goes into a profit, you're only going to be making it on the 10 or 20% that you've put in. Dollar cost averaging it most certainly doesn't work. If I look at 5-minute trading and I say, okay, I'm going to get into 5-minute trading now. My risk is now suddenly narrowed down into a small portion of the market rather than a bigger portion of the market. So now if you take a 5-minute chart like this, we're on the S&P 500 at the moment. You take a chart like this, look how quickly that candle is moving. So I equate it to a situation of being in a room, and I've invented this fantastic new system, and I put 1,000 people in there to have a look and tell me what they think of my system. And they come back to me with a survey. 800 people say to me, do you know what, Rob, that's a fantastic system. 200 people say it's rubbish. That kind of gives me a very good sample size. I've got a good sample size. 800 people told me it's good. I equate the 5-minute trading to, I put 5 people in the room and I say to them, have a look at my system. 3 people come back to me and say, Rob, that was a great system. 2 of them say, no, it's rubbish. It's not really a good sample size, is it? So you've got a very watered down sample size. You're taking a chance on a very small amount, and that's kind of what I equate day trading to. So if you're going to get into fast trading, you've got to have a very particular high risk mindset as well, and the mindset has got to be completely different to your swing trading mindset. Now, a lot of people will say, I'm going to come in, I'm going to take trades at the open, and I'm going to make $200 every day, and then I'm going to go to the beach, okay? Because me on the 4-hour, I come in, I take my positions, and then I can go to the beach, I can go and do whatever I want. I don't have to sit and watch the charts, obviously. I can just do that. The issue comes in with I'm going to come in and make $200 and that's it, I'll go down the beach, is after the 2 hours is up, you find yourself in a loss rather than in a profit, and you go, oh no, I'm in a loss. I better stay here and try and recover that and try and get it back. And you end up watching the charts for 14 hours a day rather than doing that freedom bit of I'll just come in and trade for 2 hours a day. You end up chasing the trades. And if you don't, you're $600 down today when you were supposed to make a $200 profit. So tomorrow you come in and you start $600 in arrears, and then you lose another $400, then you're $1,000 in arrears, and day 3 you come in and you start thinking, well, I can't be targeting $200 anymore because I'm $1,000 down. I have to get that back. This becomes an issue. Trading on the smaller time frames can be insanely tricky.
You don't say.
So now, for example, here we are on the S&P 500. How do we trade this? How does a scalper look at this and say, well, I want to make money on this. Which way am I going to trade it? Now, I just told you guys that all of these candles are mixed into one little candle up here. Maybe on the H4, maybe on the D1. It's all in that candle. It's all in there at the end of the day. Now, how do we work this out? Well, the best thing to do is to take it all the way up to the top of the day and say, well, actually, this is bearish. The whole market is actually bearish on this. If I go to the H4, this is pretty bearish. If I go to the H1, it's also pretty bearish. Well, very bearish over there. So if I go to the M5, what have I got? So what I would do if I was trading on the M5 or the M1 is I would say, well, since the market's bearish, since the market's going to the downside, perhaps what I should do is only take short trades. That way, I've kind of put the market in my favor. But that's if I know that for sure the market's going to remain bearish, and I don't know that. It could turn around today and start becoming bullish. It's a 50-50 market. All trades are 50-50. You never know whether you're going up or down. You've got to have a very strong loss psychology to trade on these lower time frames. That said, you can use the exact same strategy that we use, the exact same business plan that we use, make more on the wins, lose less on the losses with lower time frames as you do with higher time frames. But you've got to have the threshold to do it. So what I would do is I would say, well, on the top 5-minute time frame, I would look at this and say, well, I'm going to go short at 6706, and then I'm going to have a look at, see if I can make a profit down to 6694, for example, based on the fact that the overall market is short on this particular product. And that's kind of what I would do on day trading. So if I go down to, for example, this US dollar Japanese yen, and I look at it on the H4 as well, I see that it's bearish. It's bearish on the H4. I look at the D1, it's bearish on the D1 on the day. And in fact, on the day, it's kind of hit this pincer top. It's showing me that it wants to go down. So that's kind of convincing me that this US dollar Japanese yen is pretty bearish. So what am I looking for in the US dollar Japanese yen? I'm looking for short trades. All I got to do is look for the short trades. Here's a nice big engulfing candle. It comes back up here to this 156, comes back up here to the 156.5, then there's an all possibility you're going to get a good short trade down, back down to the 156.35 where it is now. So you wait for it to crawl back up here, give you a short trade and come down. You can use the same price action trading principles if you want to. You don't have to use different principles in the slightest. Perfectly okay to do that. Nothing wrong. That's it. So now you know you're only taking short trades. Now, what do? Do you go for the whole hog and wait for the top, wait for it to come all the way to the top? Do you wait for this level on the engulfing candle, wait for it to come here and take it down? Do you wait for it to break structure and then take long trades? No, we don't take any long trades because we believe that it's short on the higher time frames. And that's kind of where we're going with this. And that's how we're working with these 5-minute trading charts. There's a different mindset that you need to trade on these lower time frames, a completely different mindset to trade on these lower time frames. You need to have a fast-paced mindset. For example, when you take a trade and you sit and you work out where your stop loss is and you sit and you work out where your take profit is, on the 5-minute trading, you can't sit for minutes working that out. You basically got to know what size your trade is, so you kind of prepare before you start trading. Now, what I would always suggest with 5-minute trading, and this is the way I always did it in the past when I did it, don't know why I did it, but I did it, is don't trade all of these products. For example, you see I've got a huge watch list here. Okay, this is a massive watch list on my account. Just about everything's on here. Don't have a huge watch list like this. And I've got other watch lists as well. I mean, insane watch lists of shares and everything on here. Don't do that if you're trying a 5-minute trade. If you're trying a 5-minute trade, then pick 2 or 3 and then just trade with those. Just trade with those. Determine what size you're going to trade on those products before you trade. Determine so that you know how much loss you're prepared to take, how much it's going to cost you per point. Do all your calculations before the market opens and then know exactly how much you're going to trade. And then in that little blocky there, you can put exactly the size of the trade that you want inside there. The common mistakes that people make on these lower time frames is they don't follow a strategy. They don't follow a business plan. The biggest mistake that traders make on these lower time frames is thinking they're going to come in, trade for 2 hours, make some money, and they don't. Not putting a stop loss in place or not adhering to the stop loss that they do put in place. So say, for example, you went short on this and you said, I want to put my stop loss here, and then it starts coming up and then they move the stop loss away. Well, they just don't put any stop loss in it at all. Not having a proper stop loss, not keeping the risk the same on every single trade. Scalping and taking small profits. In other words, you see yourself going to a small profit, quickly click out. Very similar mistakes to what you would make on the higher time frames, only now you're making them on the lower time frames. That's kind of the only difference between lower time frames and higher time frames, but it's the speed of trading that hurts you. It's always the speed of trading that hurts you. For example, Brent crude oil has been bearish. If you are looking at the higher time frame and saying, okay, this is bearish, and then I'm going to go and take a trade on the lower time frame, a lot of people would call it a sniper entry and say, oh, we're going in with a sniper entry here. But actually not. What you're actually doing is you are actually trading or day trading on lower time frames and trying to time the market. Now, one of the most impossible things to do is time the market. You cannot time the market. Nobody can time the market. The best way to make money in the markets is time in the markets. We all know this. We all know this already. If you're trying to time the market on M1, M5, for example, look how insane the 1-minute chart is and how quickly it'll move around in comparison to, say, a 5-minute chart even. I'd say, you know, a lot of people get caught up going down to these lower time frames, mainly mainly because they're bored, mainly because they want to sit and watch charts all day, or maybe they think it's more exciting. But the trouble with more exciting is it also becomes more expensive. I don't know if you guys know, but the statistic is very clear that 99% of traders that end up trading on 5-minute and 1-minute charts end up losing. Only 1% are actually successful. And it's because there's a special kind of mindset that you need. You know, this whole risk effect on lower time frames is pretty insane, because here's gold, for example. Now, on the 4-hour time frame, like I said, I can take a short trade here if I wanted to. I said we're going to go long here, and I'm waiting for it to come down here. But if I was going to take a short trade on this right now, because it's bearish right now, I'd put my stop loss up 50 points away. And that's quite tight on a 4-hour chart. But on a 5-minute chart, if I was going to go short on this, I'd go short, say, at 4135, and I'd put my stop loss at 4143. I'd put my stop loss 10 points away, which means taken out at opening of the market, I could get taken out or swept out of the market. That's how most day traders lose. They get swept out of the market really quickly. As I said, I did the survey on traders that trade on 5-minute charts and 1-minute charts. I did the survey which asked, do you think you're going to win if you trade on these lower time frames? And that was 50-50. Did the survey on how many people are actually trading it. It's about 60-40 or not. It's a very 50-50 thing as to the mindset of people as to whether it's a good idea to trade on faster time frames or not. I think it's got a lot to do with the amount of guys out there that are showing you that you can get into trading and you can trade on these lower time frames and make quick money. But you can also lose quick money. Calling the moves on lower time frames is, I don't want to call it irrelevant, but if you're calling a move on a lower time frame, you're not getting the proper move. You're not getting a decent answer to the move. You're not getting decent research into it or information. It's very much just a here or there sort of scenario as to which way it's going. Imagine Bitcoin. Let's go to 5-minute charts on Bitcoin and look at that. Look at how quickly that ran down. It's going short because we saw that it is going short on the higher time frame. We can see that it is bearish. So now we go to the M5 and we say, well, this is pretty bearish. You know, this is going down, but look how quickly it goes down. And look how many points it takes out on crypto, and crypto is expensive. So I just say, you know, if you're going to trade on these lower time frames, you really do need a completely different mindset as to do it, but you can use the same system. You don't have to use a different system. I think it doesn't matter whether you're a beginner or a seasoned trader. You're going to take the same pain when it comes to trading on these lower time frames. You're going to have the same sort of result, let's say, the same result at the end of the day. This Ethereum is also falling down now, and everybody was talking about it going up. Can you imagine? So yeah, that's my little story on my feeling and the pros and cons of the 5 and 1 minute charts. As far as I'm concerned, there's more cons than pros to trading on the lower time frames. I gotta say, in my opinion, there's more cons than pros to trading on those lower time frames. I think you should all be sticking to the higher time frames, particularly if you're beginners. Rather trade on the 4-hour of the day. You'll be better off. You'll also get a feel for it. When you get bored and you don't know what to do with yourself, rather than dropping to the lower time frames and trading on those 5-minute time frames and losing all your money, maybe rather look at finding something else to do. But if you do need to trade on those lower time frames, I would say don't take your whole account and put it in there. You know, if you have $100,000 and you're trading with it and investing with it and whatnot, take a small percentage of that and play around on the lower time frames and see how it goes. See how that works out for you. But do it with your real money. Don't do it with a demo or anything like that. Do it with real money, because then you'll see for yourself how good you are, and if you are able to do it or not, or if you in that 99% of people that tend to lose on those time frames. Every time I've traded on 5-minute charts, I've had the luck of coming out kind of break even, maybe a little bit up. But I've never walked away with billions from trading 5-minute charts, that's for sure. I've always made far more money on investments than I'll ever make on 1 minute and 5 minute charts. That's for sure. Well, that's just a guaranteed. So yeah, that's my rant. That's my story on that. That's kind of where I am with 5 minute and 1 minute charts. I don't think it's a good thing. I do see it's a 50-50 call, but that's my feeling on it at the moment. On that note, I have to be on my way. It's been great being here. It's been great talking to you guys, and I've had a lot of fun. On that note, make lots of money and enjoy your trading. And come back and join us on the Telegram channel. Don't forget that. And I'll see you later.